Welcome back, guys. Thanks for being here. Thanks for watching. If you haven't subscribed as yet, please subscribe now and leave a like on our previous video and leave a like on this video. If you have any comments or anything to say, you know where to leave those comments in the comment section, of course. Yeah. So the previous episode we spoke about trends, right? Uptrend, downtrend, and how a trend can be moving sideways, which would be known as ranging or consolidation. Now, I also went into how a uptrend is made, right? And I spoke about pullbacks. I spoke about how a downtrend is made. I spoke about pullbacks again. So the thing to understand from that video is that you have to know how to trade a pullback. I won't be making a video to put on YouTube teaching how to trade on pullbacks, right? That video will be a perk. Remember before I was saying I'm gonna do some subscription thing from somewhere around $5.99 to $8.99 a month, where I think that's pretty cheap, yeah. So where you get like extra perks, so like you get extra videos that goes in depth, as well as Forex material, that being guides and books and whatever. But anyways, let's get into episode 2. Oh, awesome. If you didn't watch the previous episode, I'm going to leave some card or tab so you can press on that you can watch that episode. Yes, as I was saying, episode 2, going to be talking about candlesticks. So before I even go any further, let's just look at this right here. Now this is a guide kind of book thing that I have within my files. So like I said, if you do membership subscription thing, you're going to get all these also. But for now, I'm showing you, right? Candlesticks. Main thing to understand when you're looking at the charts, right? What is a candlestick and what each thing represents. So as you can see, it says the green candle is the bullish candle. The red candle is the bearish candle. Bullish goes up, bearish goes down. And then here, it has a diagram of the candlestick. This is the body, this is the upper shadow, lower shadow. I call them wicks. Now, within the candlesticks, right, there's only certain ones that you really need to focus on or really need to know. Well, at least for me anyways. So, let's go around here. So you have hanging man, hammer, inverted hammer, bullish engulfing, bearish engulfing. Most important ones: bullish engulfing, bearish engulfing. Let's just get that off. Alright, let's look at the market now. We know already that this is an uptrend. If you don't know, then go and watch the previous video. So this is an uptrend, right? Now this is how candlesticks come into play. A candlestick helps you to see which direction the rest of the candles will be moving, or which direction the market will be moving in. So certain candlesticks can mean certain things. Candlesticks can also help you to see the transition between the market, meaning from an uptrend to a downtrend. The main one I said I look at are engulfings, right? Let's look at engulfing. Here we can see this green candle. Look at this big green candle, right? It's way bigger than 1, 2, 3. So that's how you use an engulfing. The candle engulfs the rest of the candles. And then after an engulfing, you see a continuation of green candles, continuation of bullish candles. So, main thing to look at, engulfing, then look at the next set of candles. What do they do? If you get a continuation of the same candles, then it's most likely going to be going up. Here's the next engulfing from before, right? So big engulfing. Engulf everything back here. Then we saw nice push up the here. Got a pullback, then engulfing again, and then push straight up. Engulfing. The next thing that I always tend to look at is the wicks, right? Why I say the wicks is because wicks can determine or mean certain things. How a wick is formed? A wick is formed when a candle pushes up and then closes below where it ultimately went. So it means that This candle went all the way up to here, but came back down and closed below here, right? So this created a wick. Normally when you see a lot of wicks, it means that the market is failing to push to a certain direction. So the candles are trying to push upward, but it is failing. That is why you're seeing all these wicks. And then what do we see? A big drop. That's how I look at the wicks. Here's an engulfing again. Engulfing, engulfed all these, push down. And you can look at the wicks to the upside also. So we're seeing wicks to the upside, then we got engulfing candle right here. Perfect opportunity to sell, pushing all the way down. The next thing I like to look at are dojis. Or if you don't even know what a doji is, you look at small candles versus big candles. A doji tends to be a little tiny cross, like this and this. A doji normally shows that the market is slowing up and looking to make a change. You won't always get a perfect doji, so just look at how the candles are getting smaller and smaller. Up here we can see candles are getting, it was going upwards, then the candles got, look, big, upward candle got smaller and smaller and smaller, and then it transitioned and went down. Even right here, this little pullback, you got some nice big red candles, then right here it got small and small and small, made a little pullback, and then got back big, pushing down. Here it slowed up again, small candles, and you get big candles pushing down. So the size of the candles, the engulfings, the wicks, those are the main things that I look at. Yeah, I said hammer and inverted hammer and all those stuff, but I won't get into that now. The main thing to understand is the wicks, engulfing, dojis, or small candles versus the big candles. And just like that, you can look at how the candle is forming, how it has formed, and you can use that to determine which direction the market will be going. I'm going to show you how you take a trade based on an engulfing. So, say you're looking at the market, right? It comes to right here. As you get this engulfing, you hit buy. From you hit buy, the market is going to be pushing upwards. It might take some time. You might get some drawdown. Drawdown is another name for pullback. So the price drew down, right? Or draw down, however you want to say it. So it made a little pullback and then it shut up. Even if you miss this engulfing here, there's a next engulfing right here. So you get this engulfing and price shoots all the way back up. Let's look at this engulfing over here. Price was pushing down, made a little pullback, came right here, nice engulfing, hit that sell, price shoots all the way down. Say you wasn't watching the market this time, come to right here, engulfing again, price pushes down, small pullback, another engulfing, and then pushes down. As simple as that, guys. So yeah, if you like this video, leave a like, remember to subscribe, and leave comments. And if you're interested in that monthly subscription thing where you get extra perks, where you'll be getting additional videos that go more in depth and additional material, which will be like reading material and guides and such that I put together myself or I source myself, just leave an email or message me on Instagram and I'll get back to you.